Did you know that most traders in the market only watch the price? But professional traders watch something much more important: volume. Because price shows what the market is doing, but volume shows the strength behind that move. And if you understand this relationship, you can start seeing what smart money is actually doing. Hello everyone, welcome to the channel. If you want to learn trading in a professional and structured way, this series is for you. In this series, we are going to learn a powerful trading method called volume spread analysis, also known as VSA. Today is week 1, day 1, and in this lesson we will understand the foundation of VSA. Most beginner traders start trading using indicators. They use RSI, they use MACD, they use moving averages. But the problem is that most indicators are lagging. That means the signal often appears after the move has already happened. So many traders end up entering the market too late, or exiting when the move is almost finished. This is why many traders struggle to stay consistently profitable. Professional traders usually focus on two main things: price action and volume. Price tells us what the market is doing, but volume tells us how strong that move really is. When price and volume are analyzed together, they reveal important information about buying pressure and selling pressure. Volume spread analysis is a trading method that studies the relationship between volume, the spread of the candle, and the closing price. By analyzing these three elements, traders can understand whether the market is strong or weak. VSA helps traders identify professional activity in the market. In simple words, it helps us understand what big institutional traders might be doing. In the financial markets, there are two main types of participants: retail traders and institutional traders. Institutional traders include banks, hedge funds, and large financial institutions. These players have huge capital, and their orders can move the market. This is often referred to as smart money. Retail traders usually react to the market, but professional traders try to follow the footprints of smart money. To understand VSA, we must focus on three important things. First is volume. Volume shows how much trading activity is happening during a specific candle. Second is spread. Spread refers to the size of the candle, which is the distance between the high and the low. Third is the close of the candle. Where a candle closes can reveal whether buyers or sellers are dominating that move. When these three elements are analyzed together, they reveal the true story behind price movements. Imagine you see a bullish candle moving upward. At first glance, it might look like the market is strong, but if the volume behind that candle is very low, it could mean that there is no real demand in the market. On the other hand, if a strong bullish candle appears with high volume, it usually indicates strong buying interest. This is the kind of insight that VSA helps traders understand. The reason VSA is so powerful is because it focuses on market behavior rather than just indicators. It helps traders identify market strength, market weakness, accumulation phases, distribution phases, and possible trend reversals. When traders learn to read volume properly, they start seeing the market from a completely different perspective. In the upcoming lessons of this series, we will cover many important VSA concepts. For example, no demand candles, no supply candles, stopping volume, climactic volume, effort versus result, and many other professional trading concepts. Each lesson will build step by step so that you can develop a solid understanding of market behavior. Remember, trading is not something you master overnight. It is a skill that requires patience, practice, and consistency. But if you take the time to understand how the market really works, you will slowly begin to see patterns that most traders completely ignore. Today we covered the basic introduction to volume spread analysis. In the next lesson, which will be week 1, day 2, we will start learning how to read volume properly on the chart. If you want to master professional trading concepts step by step, make sure you continue following this series. Thank you for watching, and I will see you in the next lesson.